So what exactly is dollar cost averaging? Are you thinking about savings but don't have a solid low risk strategy? Well, you might want to hear about dollar cost average savings. So in this video, I'm going to explain to you exactly what dollar cost averaging is, how it compares with other investment strategies, and why it's a great option for minimizing risks. But most importantly, you'll know whether or not dollar cost averaging is a great option for you. Hey everyone, welcome to my channel where we talk everything finance, real estate, investment, savings. And today I wanted to discuss with you a strategy called dollar cost averaging, okay? It's a very good investment strategy that's been around for years and years and years, and it can help you earn money while you sleep. And if you stay all the way until the end of this video, I'm gonna wrap up this entire strategy so that you can use this technique to become a millionaire by time you retire. So sit back, relax, enjoy, and if you don't mind hitting the like button so that other people can enjoy content just like this, that would be awesome. All right, folks, let's get right into it. So first of all, we got to answer that question. Exactly what is dollar cost averaging? Well, dollar cost averaging is averaging in an investment strategy where you buy financial assets regularly with a set amount of money in set intervals. With this strategy, you never change your investment amount. Whether it's a specific asset price goes up or down, you still invest the same amount. It's kind of like paying a utility bill, right? Like let's say you have a phone bill that's $150 every month, you just pay $150 every month. The two key features in this strategy are, number one, you'll invest periodically. Number two, every beginning of the month, you'll always invest the same amount of money. Okay, so if that's $100 a month, then every month on the same day, you invest $100 into the market. So what does this mean for you exactly? Since you're purchasing equity consistently with the same amount of money, you actually get a different amount of share every time. You see, if the stock price goes down, then you're going to get more shares for your $100. Likewise, if the stock price goes up, you're going to get less shares for your $100. So with this strategy, you're creating your own average price over time rather than trying to time the market. Because look, we all know that timing the market almost never pays off. You know, perhaps one of the most attractive advantages to dollar cost averaging is just how accessible it is to everybody. The everyday investor, somebody working at McDonald's, or somebody that's got millions of dollars. You don't even need a lot of money to get started. You can just set aside a comfortable amount of money based on your income every month for investing. And then when your monthly income increases, you can set aside a little bit more, bigger portions. The most crucial part is to keep the investment intervals very regular. If you set out at the beginning of the month, you always do it the first of the month or the beginning of the month. Okay, so buying shares strictly into a company is awful stressful. On one hand, if you buy it in too early and the price dips, you're going to feel like you lost money. On the other hand, if you wait and the price jumps, you're going to regret not buying it earlier. So there are tons of strategies out there that work and that work great. And why we're talking about dollar cost averaging is because I feel that dollar cost averaging has lower risks. And if you're wondering how it's different, well, dollar cost averaging is about keeping the risk low and building an investment portfolio over time. This is not about day trading or swing trading. Most investment approaches go by the principle of buy low, sell high. Some of them are like you have to let it go within a day. Some of them are just trying to grab as much profit as possible. Now, it seems straightforward and it seems like you can build a lot of wealth that way when you look at it like face value. Unfortunately, you probably know this, but the stock market is a very volatile place. which means deciding when you want to buy or sell. It's more or less a guessing game these days. You'll be trying to time the market when the market falls, and you'll be trying to time the market when it rises, which is highly unpredictable. And that makes this idea actually super risky in comparison with dollar cost averaging. And it can be easy to lose a lot of money in a very short amount of time. Not to mention the sheer anxiety of investing lump sums into the stock market is the reason on why many investors have to wait it out until prices are really, really low to buy. Well, what would happen if that was the case? The result would be you'd likely lose out on many returns and achieve less in wealth than building it in the long run over time. Dollar cost averaging eliminates all that anxiety when investing in financial markets. Since you're so focused on long-term gains, your investment decisions aren't dictated by emotion and short-term trends. Instead of buying all your assets at one price, you're investing them regularly at different price points and banking on a favorable average price over a longer period of time. Overall, dollar cost averaging is a lot better than trying to time the market or just putting your money into a savings account and not investing it at all. Okay, so we can go back years and years and years, and it's always going to be more favorable for you to at least get in the market and get invested. Okay, now let's go ahead and look at a real life scenario. Now let's say that we have $18,000 and we've already identified a stock that was really super attractive and we're hot on it, we want to buy it for sure. However, the price hasn't really been stable in the past and we're not quite sure if the current price of $40 a share is a great offer to begin with. So instead of risking our entire lump sum, we're going to go ahead and decide to buy $3,000 worth of the equity at the beginning of every single month for 6 months, starting in July. So in the first month, we buy $3,000 a share, $40 worth of shares. I'm sorry, $3,000 worth of shares at $40. The other 5 months, we buy the shares at 25, 20, 50, and 20, and 40, respectively. So as you can see, you get about 150 shares when the price is at its lowest and about 60 shares when the price is at its highest. By December, you bought $18,000 worth of share at an average price of $32.50. Much lower than if you had invested everything all at once at $40. Means that you'll have bought more shares with the same amount of money by using dollar cost averaging. And like, let's say that tomorrow you needed to cash out and you were to sell it all, well, you'd still make $7.50 a share because you dollar cost averaged into those shares at $32.50. So is this a great option for you? Dollar cost averaging is pegged on the idea that market prices will eventually rise. Now look, we can't really predict how financial securities and how the financial markets are going to perform at any particular time going forward. We know though for decades worth of data has showed us that markets continually go up over time. Now dollar cost averaging is a great option for investors, especially if you're just starting out, as it doesn't really dictate the amount of money that you must put in to invest. You can start with as little as like 10% of your pay. Put it into a mutual fund or into, I actually would recommend a Roth IRA. Start building your portfolio over the years. Now, apart from being accessible to people of all income brackets, dollar cost averaging gets rid of the emotional turmoil that sometimes comes with investing. I know I get it whenever I invest in the markets. Especially if in the past I had done lump sum, but I'm always doing dollar cost averaging now. Really, it's not that complex. You can research the stock over time. You can invest regularly, whether the prices are going up or they're going down. You're essentially building your wealth by putting a small amount of money to work over a longer period of time. Overall, this strategy, if you're looking into investing in like stocks, bonds, ETFs, index funds, mutual funds, this strategy can work for you. Now, I mentioned this before, but getting into any investment, keep in mind it's risky. You could potentially take losses regardless of the strategy that you use. So before you get into it, you should really consider your risk appetite and don't put in any more money that you're not willing to lose. Also, your investment plan should work around your unique situations and goals. Like for instance, maybe you're looking to buy a house, or maybe you're looking to make profit in a couple weeks or months, or maybe you're looking to build long-term wealth. Everybody has got a different idea. But remember, dollar cost averaging is a great strategy for people who want to build wealth while reducing risk for the long haul. Okay, and I can't stress that enough. So don't get into it if you're planning to pull out your investments soon. Okay, this is something, like I said, it's a long-term investment. And what I'm going to do is I did a video just last week that talked about how you can invest $200 a month and retire with 3.5 million. I'm going to go ahead and link that video right here so you guys can check that out, and you can see why time in the market is much better than timing the market. All right, guys, that's pretty much all I have for you today on dollar cost averaging and the investment strategy and the saving strategy. So tell me, are you guys going to try this dollar cost averaging? Also tell me, what investment strategies have worked for you? Let me know down in the comments below. Well, that's all for now. We'll see you in the next one, folks. And if you enjoyed this video, do make sure to hit that subscribe and turn on the notifications as well. So that way you won't miss any of my videos whenever I upload another. Also, check out my other videos to learn more about investing and financing wisely. Have a great day, guys.